Hi, this is James Eng, and I'm here with Clay Allen. And Clay is in our Atlanta office, and I thought it would be good to give someone who has never been to Atlanta, but maybe focused in on maybe like I look at demographics, I look at everything that I've seen in Atlanta, and I really like everything coming out of Atlanta. So I wanted to bring Clay on and really talk about the market and give someone from maybe who just flew in for the day or 2 days, or maybe is out of California and New York an overview of Atlanta. So, Clay, I'm going to take it, let you take over. You have been in Atlanta for a long time, and maybe just start up and tell us about the Atlanta market right now.
Sure. So, I'm really surprised, James, you haven't been to Atlanta, but looking forward for your first time coming here. But this is a great map to start off with. Very, very vast area, 29 counties. And that far left side of the screen there, that's the state of Alabama, that straight line. So it's a really large area, composed of several or numerous submarkets. But traditionally, when you talk about multifamily and you talk about institutional capital, the institutional capital is really invested in what we call the V. And the V, if you're looking at this screen, the star right in the middle of Atlanta, where the downtown area is. If you follow that up through Midtown, and then it starts to split off in I-85 and I-75, that's where you've seen most of the action. So downtown, Midtown, and you get up into the northern suburbs like Marietta, Roswell, Alpharetta. A really big market is Dunwoody, Sandy Springs, and then over to the east would be Norcross and Peachtree Corners, Johns Creek. So you see a lot of activity there still today. What I'd tell you though is what's gotten a lot of interest over the past 3 to 4 years is the south side of Atlanta. That's everything below that airport, below the perimeter of Atlanta. Anywhere going from, say, Union City down off 85 across to I-75, where you see Stockbridge and McDonough. And what's fueling that growth is the industrial leasing, industrial jobs that have been pouring in. But I-75 goes down to Macon and then attaches to Savannah. It's about a 4-hour drive or so from Atlanta, 4.5-hour drive from Atlanta. But you have the Port of Savannah, which is the largest single container port in the United States, feeding all this inventory up through Atlanta, on to Charlotte, on to Birmingham, up to Nashville. So it's a very important area, seeing a lot of action.
All right, so we're going to go through a couple of submarket reports. So when you guys are thinking about Atlanta, so we're going to go talk about what, like the north side, the south side, and then inside, outside the loop. Is that sort of how
Yeah, exactly. I thought it'd be best to break it up into 3 large swaths of area of land.
Okay, yeah, sure.
We're going to look at the north side first. And again, that's everything above the perimeter, 285. And then we're going to look at the inside the perimeter. We call it, if you're from out of town, we call everything inside the perimeter ITP. And that's where the cool people live, James. That's where you'd probably live.
Okay.
People like myself, we live outside the perimeter where it's a little bit more affordable, and it's nice schools and whatnot. After we look at inside the perimeter, we're gonna look at the south side. So again, anything from Union City to Stockbridge and McDonough.
Got it. That's perfect. I guess for people who haven't been there, I guess talk about why people live in Atlanta.
Yeah, so just as it says, very, very diverse economic base. You can see all the recognizable companies here across many different industries. You have retail, transportation, logistics, financial services. You see ICE up there. I'm not sure if many people know who ICE is, but they own several exchanges, one of them being the New York Stock Exchange. Food and beverage, Coca-Cola, that's a staple here in Atlanta. Very well diversified. What I'd also point out is that you have a number of universities, and that's very important, honestly, especially inside the perimeter where you see a lot of young tech workers moving in. That's being fed by Georgia Tech, Emory, Georgia State University, which is the largest university in the state of Georgia, a bunch of HBCUs that are based here in Atlanta. And you see Microsoft, Google, making big job announcements. Microsoft just made a 1,500 job announcement about 2 months ago for the Atlantic Station area, taking down 2 buildings. They're going to be hosting their AI and cloud services headquarters there. So it's a a great economy. I would tell you, if you want to flip to the next slide, it's very low cost of living, low cost of doing business. Dallas is down there as well, and so you guys in Dallas benefit from that greatly. And so the Metro Atlanta Chamber of Commerce is probably sending this graph out to a lot of companies in New York and San Francisco. And we're seeing that, right? We're seeing that tech job growth coming from San Francisco. You guys are seeing it. Phoenix is seeing it. Austin just had a big announcement from Tesla this past week. So Atlanta's benefiting from that as well.
No, that's perfect. Let's talk about airports for a little bit. DFW, I think, took over that slightly edge over Atlanta, but still a lot of people coming in and out of Atlanta every day.
Yeah. So we're down to, I think, 25-30% capacity during the COVID era, but hopefully that will return pretty soon. And the one point I'd make here is that we can reach 80% of the U.S. population within a 2-hour flight. So it's very convenient for businesses to have regional and corporate headquarters here in Atlanta. And so you see a lot of that people moving down, corporations moving down from the north. Again, climate, like you guys have. So it's, and I would say too, with Hartsfield-Jackson, it's a huge employer, over 63,000 employees. That's been driving a lot of the growth down the south side as well. So it is, it's the largest employer in Atlanta, largest employer in the state of Georgia. Very important institution.
Yeah, I mean, I'm seeing a lot of the same things as in DFW in terms of, it's sort of good climate, good, well, maybe not right in July, right? But good economic base, good airport system, good transportation, good sort of close industrial. So let's get into maybe rents so far during this whole COVID era.
Sure. Yeah. And this slide kind of popped up on LinkedIn this morning, so I threw it in the deck. What's interesting about this, I just got finished talking about what helps make Atlanta somewhat recession resistant. Certainly not recession proof, right? We certainly saw the high housing crisis, but you see a bounce back here in the rents. With the yellow line being Atlanta, you'll see that we dipped fairly significantly, about 1.5% from March through May, but we've rebounded just as quickly up into July. So we're among the top 20 largest U.S. markets. We're ranked number 3 right now for rent growth coming out of COVID.
Did they give a reason?
No, I didn't see a reason for it, but I just saw the pretty graph and I liked it.
All right, so let's look at maybe historicals and give people an overview of sort of Atlanta and then get into submarkets.
Sure. So, as far as number of sales is concerned, we were averaging about 200 to 250 for the past 3 years. 2020 right now, as of this recording, halfway through is July 2020. So naturally it'd be lower, but first quarter, I think when you look at that, we were on pace to match 2019 volume. Of course, COVID came along and the sales market pretty much dried up. I don't know about you. I'm starting to see some emails though with some OMs coming out. So I think that's starting to dry up a little bit, or soften, I should say.
On this price per unit, any idea on why it sort of went down for 17, 18, and then it's come back?
I really don't. I try to make sense of that. Probably some noise in the data I pulled, but I think the bigger thing to focus on is about a 30% increase from 2017 to 2020 on the sales per unit volume. I'll tell you as well, this is A, B, and C. So don't take it to mean you're going to come down and get a Class A plus property for $150,000 a unit.
What do you think the range is for just high level? If it's average, let's say in 2020 is 140, what's sort of like your A deal, B deal, C deal? What's sort of the range for people out there?
So it's gonna vary by market, and in the future slides we'll hit that. Okay. But yeah, I'll just speak to it when we hit to those slides. But yeah.
Okay. Rental rates. This is on the north side, so we're gonna jump into Northside now.
Yeah, so
Okay.
we're looking at the north side. And again, this is from, say, Kennesaw, Marietta, over to, across the perimeter area, across over to Norcross, Johns Creek location. So the blue is discretionary. That would be your A plus product. The yellow would be called B plus. Red would be kind of C plus, B-ish, or I should say B minus, I apologize. And then that bottom line, I guess you call that blue, that's workforce, call it C plus type product. So that sets the stage for the rest of the slides. North side, what I've noticed is the A's, we saw decent rent growth. I think the compound annual growth rate turned out to be about 2 to 3% up here over the past 4 years. A little bit of a trail off between 2019 and 2020. Your rents are around 1,400 or so right now. What was pretty eye-opening, I don't know if you see this in Dallas or other markets, but as you go down the quality stack, if you will, you'll see that the rent growth gets better and better over these past 4 years. The compound annual growth rate on that bottom line, the workforce, is about 5.5% for the north side. Not a lot of it. I mean, there's the vast majority of product in this area, I'd say about 60% plus is the A and B product. Not a lot of workforce. You'd see some workforce over in Norcross, but just great returns on that asset class.
Yeah, so on like low mid range, like this red line, you're taking pretty much $1,000 rents going to 1,200 over. It's a $200 rental increase over 4 years or something like that. So
Sure.
I mean,
Yep.
yeah, you're getting a pretty big bump. And yeah, we've seen similar in Dallas, and that's what's giving people a little hesitancy, is how far that sort of lower piece can run.
Sure.
So as an investor, you're having to make the decision: do I invest in higher quality stuff where there might be new supply constraints
Yep.
or concessions? And once those guys start giving discounts, then do I have to? So that's the trade-off that people are having to make.
Sure.
But let's talk about occupancy.
Yeah, so occupancy, I mean, I would say here too, workforce kind of wins the day, at least on the graph. One thing that looks a little funny in 2016 is 100% occupancy. I don't know if that was the case necessarily, but suffice it to say, it's held higher occupancies than your other classes. One thing to point out as well is, as those landlords were pushing rents on the workforce, you see that gradual decline, but it's still sitting pretty well. I mean, you're about, would that be about 95.7, 95.6 here in June, July, whereas your other asset classes are kind of hanging there together, 94, 93.5 to 94, 94.5. Yeah, and so here, this speaks to a little bit of the little bit of downward trend in occupancy on the north side. The ramp up in completions, not a massive amount for the wide area that we were looking at, 2,300 units. Where I've seen that more cases than not is, say, the Marietta area, also Alpharetta, Roswell. So you've seen a lot of product that's come up in those areas. I was actually down in Marietta last week, this time last week, and I was driving along Delk Road, which used to be a little bit lighted, but now you see two brand new properties that I would totally live there. Really nice. Probably can't afford it these days, but it's very close to the Atlanta Braves Stadium, which was built about 3 years ago. So a lot of activity in that area. So here, this would kind of speak to the trades over the past 12 months. And I just mentioned the Marietta area. If you look at the lower left-hand side, the map, these are where the trades occurred. And this is where you see a lot of investor interest for value add. I just mentioned the Braves moving in 3 years ago, moving their stadium from downtown up to this market, the Cumberland Galleria market. And it's just seen a resurgence. A lot of investor activity. My prior company, actually, we bought 2 properties as part of a large portfolio across the Sun Belt. Two of them were here in Marietta, value add. Some of the larger players, Cortland has two value add deals right off of 120, pouring a lot of money into those. And, just where you see, you can see the numbers 17, 21, 30, 15, right left of 75. That's a little bit of a corridor where you have some older product that was built back in the late 80s, early 90s, and it's just prime for improvement.
So is it okay when I'm looking at the map here on this? So you're going up 75. Is it 75 here?
That's right. Yeah.
Okay. So if you go, you said it was a V coming down here, right? So everything in this area. But if you go like further west of 75, or you go further east, is that okay, or is it sort of getting on the fringes, or what's your take on sort of going past that barrier?
No, I think it's totally fine. I mean, okay. It's not where you see a ton of activity, but Atlanta has no geographic boundaries, right? So we're known for our sprawl, right? And we sprawl in every which direction, and so you have plenty of opportunities around Atlanta. For the purposes of this, though, I didn't focus too much on the east and west side, but
okay. So north side, the average. So is this year to date, the trades?
So yeah, this is for the past 12 months.
Past 12 months. Okay. So the top end stuff of 200 a door, A stuff, A minus stuff, 150, and then your C stuff. I guess there's not as much C stuff up here.
No, in fact, you see the number of trades is not representative of for both discretionary and workforce. So I would say that I would take that with a grain of salt. As you look at this workforce, you're probably going to see some lower quality stuff that didn't make this list, and would have dragged the price per unit down a little bit. But when you're looking at the low and upper mid range, that's probably a good representation of the B and A minus stuff.
So if someone wanted to buy on the north side, they're probably going to spend 125 to 150 a door, it seems like.
Correct. Okay. That's right.
Okay. All right. Next submarket.
Yeah. So I put this here just to further drive down the difference between ITP and OTP. We're going out to ITP, and inside the perimeter, that's where the city where you see a lot more of the activity. If you want to flip to the next slide.
So is this bottom picture actually Atlanta, or is that like from some movie on the OTP?
With the film industry we have here, it could be from a movie, but no, that's actually Atlanta. I'm guessing that's either close to where I live, which is Shawnee Mountain, or it's Kennesaw Mountain, which is up off 75. But if you can see through the haziness there, that's downtown Atlanta.
This is like what people who live in ITP, like this is what they think OTP is, right? Like
totally. Yeah, we're Hicks. We don't, we live in the mountains, right?
All right, so let's jump in. So this is ITP, more detailed, right?
What I did here, sorry to talk over you there. I want to slip this in real quick before we got into ITP in general. This is the Beltline. When you talk about transformational projects going on that will define a region and define the path of growth, this would be it. Our last major shock to our economy in a good way was the 1996 Olympics, right? Okay. I would say this is about as transformational as the Olympics will be, and this will be long term. So basically, this is about a 22-mile perimeter going around Atlanta of abandoned or not often used rail lines that have been repurposed for what we call the Beltline, for just what it is. You see a lot of cities incorporating pathways and people jogging and riding bikes and scooters and whatnot. That's what's going on here. And on the east side, it's completed, and it has really transformed that whole area. You see a lot of development along that area. And I should have pointed out what we're looking at right here for anybody who's not from Atlanta. This is downtown and midtown. Okay. So it's this circle is going around downtown and midtown.
So this is even tighter than the loop. What was the loop? What was the loop again? Was it 285?
The loop 285.
Okay, so this is even within 285.
Yeah. Okay. This is like a mini perimeter of a jogging path, if you will, around the midtown and downtown markets.
Okay, and so I guess the city has really focused. They've completed the east side, you said, and then so is it more just like green space? Is it sort of like the Clyde Warren Park, like in Dallas, where they just sort of like put grass over it, and then like now everything is more valuable on both sides? And
Yeah, I'm not familiar with that part, but what I'd tell you is you have green space that's being developed alongside it, some parks. You already have Piedmont Park, which is very well established. If you're looking to the right of that
okay,
I-75 and
right here.
85 emblem, that's it. Yeah, that's Piedmont Park. That's been there forever, and is a really popular attraction. But the Beltline runs alongside of it. You go south of that, and you're going to find. I'll go ahead and ask you to flip to the next page, the historic Fourth Ward, and you've seen a lot of adaptive reuse and obviously multifamily development along this let's call it a 12-foot wide path of concrete. And I can't tell you, I've taken my family down there a few times, and there's restaurants along the path, there's breweries down along the path. It is packed, and this was pre-COVID, of course, but definitely packed. To the left there, you see Krog Street Market Adaptive Reuse Project. I think that used to be Tyler Perry's original studio, maybe, or one of the studios. And then Pond City Market is a very big draw. Jamestown, based here in Atlanta, they purchased that from the city of Atlanta, and used to be called City Hall East, underutilized. The city of Atlanta sold it to Jamestown, and they've converted it to really cool techie office space. And on the ground level is a food hall, and just tons of restaurants, always crowded on the weekends. On the top of this building, it's a little bit of carnival atmosphere, if you will. You can take a elevator to the top and pay $7 or $8, and you have like some carnival games and whatnot. You have great views of downtown. A lot going on.
So that's all along this east side?
Yeah, so if you go south of Piedmont Park, you see, we call it Ponce de Leon here. More sophisticated people will call it Ponce de Leon probably, but we call it Ponce de Leon. That's where you'll see the Ponce City Market. You go south of that, you'll see the Krog Street Market in the historic Fourth Ward area. So what this has been kind of deemed is the new oceanfront property for Atlanta. So I wanted to point that out. I didn't want to spend too much time on it, but it's something to be important. If you're coming in from out of town and you're looking for the path of growth, this is where you'll find it.
Okay, that's perfect. So let's talk about ITP. So we started on the north side. Now we're coming into sort of the ITP inside the perimeter.
Yep.
Okay.
Inside the perimeter. Yeah.
So let's talk about rents there.
Yeah, you have a number of submarkets within the perimeter. Chambly's come on strong. That's kind of the northeast segment of inside the perimeter. You have Buckhead, which everyone pretty much knows, very old money, nice Class A office. Midtown, very popular these days. Downtown has really come back. You go down towards the airport, College Park's a really good area. So you have obviously different price points as you go to those various submarkets, but on the whole, you've seen Class A rents rise pretty well. And then we've had some supply, like I just pointed out, Midtown being kind of ground zero for the supply. I'd say West Midtown has seen a lot recently. That's coming on really strong. We have an area that's being called the Upper West Side that's starting to develop out. And then along the Beltline, the east side, like I told you, all that product is frankly acting as a weight on the other Class A product for rent growth and occupancy. You'll see in the next slide. But what's I want to point out here, similar story to what we saw on the north side. As you go down the quality stack, you see a little bit better rent growth, and you definitely see that with the low, mid-range, and workforce.
Is there that much product on the low to mid range? Because it seems like that sort of caught up. So like on this, like this stuff on the low to mid range, sort of in Dallas, it sort of caught these guys on the upper mid range, and these guys sort of caught. But there's still a pretty healthy gap here in rents. I don't know if that's just because there's not that much product down there. It's more just newer product.
Yeah, I should point out you're probably looking at a $400 difference on the A, from Northside A to inside the perimeter A. To answer your question on the workforce, when you're looking inside the perimeter, it's an urban core, so you have your really nice areas and you have some tougher areas, right? And so this is picking up some of those tougher areas. So you do have pretty good representation here. But I would say probably the higher growth would have been some of the workforce located in these gentrifying areas that were located along the Beltline area and have now seen a lot of growth in people, investors coming in and rehabbing those units.
Okay, let's talk about occupancy and sales.
Yeah, so occupancy a little bit of a mess. I don't know what kind of conclusion to draw from here. It's a little bit erratic. The workforce took off in 16 to 17, still hanging in there, 95. I mentioned the supply, and you can see the effect the supply has had on that A and B plus type of market. I've had deals in my past 2 roles in Atlanta inside the perimeter, and it's even if you have a B plus property, you're still having to compete with that 1.5, 2 months concessions that's being thrown out by landlords who just want a quick lease up. Really hard to compete against that stuff in any asset class you're in, but it's taking the most toll on those 2 asset classes.
All right. So obviously ITP, it looks like there's the same way that Dallas had a ton of sort of in urban construction. It seems like completions here are still rising.
Still rising, and it's surprising. I thought, when you look at the data, right, you look at the forecast data, you see it trailing off, leveling off a little bit, which is encouraging. We don't have that on here, but I see articles almost daily about a developer looking and filing plans for a high rise in Midtown, or I mentioned Upper West Side, one of the largest developers in the U.S. looking in that area. So it's still going to come as long as people are coming in. I think you're still going to see that investor activity.
On the completion, yeah.
Wow,
look at these sales.
Yeah, so 358,000 on the discretionary. That's you compare that to the Northside. Of course, Northside we didn't have a great representation, but I remember seeing the first trade that went north of 300,000, and of course that was on the Beltline. So seen more of those since. But I mentioned some more blighted areas inside the perimeter. You see that in the sales per unit in the workforce, right? 63,000. That's probably some of the tougher areas, right? You're going to see higher per unit prices as you get closer to the urban core.
So there's a big range here. Mm-hmm. But the lower mid range, there's still some stuff 100 a door. But I guess I don't know if you can see in this chart. So on this chart, where would stuff be 60 a door? Is it even on this chart?
It's off
this chart. All right. So it'd be, if we go back, I don't know if we have a downtown chart. We don't have a downtown chart in here, but
well, if you go back to that, if you go back to the
just overall. Atlanta.
Yeah. Okay. So let's start with a star, right?
Yeah.
Work your way west, southwest, and then maybe just do south. You have a lot of activity around the airport as well, but you might have some of the tougher product down in that area.
That'd be 60 a door stuff.
Yeah. No, I'd say there's pockets, right? East Point, College Park is right next to East Point. There's some nice areas where you're not going to see that, but yeah, you'll see some of the cheaper stuff down in that area. And then I'd say far west Atlanta as well.
Okay. All right. So let's, so we did, all right. So now we're going from Northside ITP to Southside runs now.
Yeah. And I can't remember if I mentioned this at the beginning of the video or not, but the Southside, we talked about how the institutional capitals really chase deals north of Atlanta and downtown Midtown. Southside has been long ignored. And there's a lot of investors out there kind of kicking themselves for not paying attention to it about 3 or 4 years ago. Frankly, I was really surprised. The company I was a part of, we took down a 6-property portfolio. I got the OM, saw where the properties were, and I was like, well, it might be a tough sell. Let me take a look. And it showed the historical occupancies and rent growth for the past 2 or 3 years. And I was blown away. I had to go do some fact checking. I went to a couple of our sources, I think it was Yardi or Axio, and sure enough, it was being fueled by the institution or the industrial growth and the airport, all the investment that was going in the airport. So it's been a really good area to invest in, as you can see from this rent chart, outpacing in all the classes, outpacing both downtown, midtown, the north side. So how much more runway we have, I don't know, but you can see that the trends were still kind of going up. Whereas if you go back to those other charts, it was kind of trailing off,
Right.
Or leveling out. So as of this recording, I just left my prior company. We had 7 deals down there, and all of them were very well occupied and seeing a little bit of rent growth, even through COVID.
So, yeah, I mean, obviously you can, the top end is, $1,200, $1,300 compared to $1,800. You sort of ITP.
ITP, yep.
Yeah. And now, yeah, you're seeing a little bit, definitely more rent growth down here. And we've seen it sort of on the south side of Dallas as well, is that, this workforce stuff has really pushed. And that's what people are trying to figure out, is how much more can they push and how many more people can you fit in a unit to pay for the rent that you're getting. And, I don't know if people got pushed out. Sort of what happened in Dallas was people would, be in one submarket and they would just keep going further and further out. If they couldn't afford the rent, let's say in the nicest area, they'd move out one layer out and then keep being pushed out. So, but so on the south side, is this the cheapest rent in Atlanta on the south side?
I would say so, probably. There's pockets of it. There's very nice areas of the south side, Peachtree City being one of them. We have a lot of airline pilots that live down there. And then you have some rougher areas closer to the airport. So you're going to find some very affordable areas in that maybe 1970s built, 60s, 70s built product. Yeah.
Okay. All right. Let's talk about occupancy.
Yeah, so I talked about what we saw in the class. The stuff that we owned was B plus, B plus. We were in the 95 up to 98%. This doesn't really reflect that. You'd see a little bit of trailing off, but again, 95 going from 16, 17, 18, the mid 90s, the discretionary, not a lot of discretionary in this area, newer product, but healthy, 96 to 97, trailed off a little bit. We've seen a little bit of development along ID5 Fairburn area, maybe a little bit off 75 as well, which has put a little bit of pressure on Class A. But yeah, to your point, James, you just mentioned people moving out, maybe gentrification. I believe that's what's happening with so many people moving into the city, is pushing prices up. And you have some pretty decent schools down here, so families are moving down. And so you look at that workforce, the occupancy, and it's just a trend you can't ignore, right? You're up to 95% from down to 92 back in the end of 2018.
Right. No, that's perfect. And then, so limited completions down here on new supply.
Very limited. And I think there's more to come. I've seen some local developers that again, down in Fairburn, have just completed one, and I believe another one's going up across 85 from where I used to have a property. But yeah, this is what has driven strong occupancies and rent growth, right? You're not having to compete with the concessions.
All right, let's look at price per door. So this looks all over the board. So
all over the board. I wouldn't pay attention to discretionary again, and that doesn't make up. It makes up 10%. That you see the pie graph there. It makes up a very small portion of the south side. Most of that being, I'd say, 80s, 90s built. 76% the upper discretionary, upper level there. Class B, B plus, and about 120 doors feels right. Again, this is a wide swath. I want to again point that out. This is not simply McDonough, not simply Fairburn. This goes across the south side.
So that discretionary might be like a tax credit deal or something might be thrown in there. Something's off there.
Yeah, I wish I had looked into that further, but no, that's not representative of what you would find in a Class A deal down there.
Okay, so probably 100 to, or probably 60 to 100 a door for most deals down here, sort of in that B2C space.
Yeah, I'd probably go up to 125, 130 door. Yeah.
Okay. Anything else? Like I always picture myself just sort of dropping into the Atlanta airport and then you picking me up and driving me around. Anything else that people should know about Atlanta, or before they, a lot of people they want to be diversified, and
Sure.
they're like, all right, I'll invest in a deal in Atlanta, I'll invest in a deal in Dallas, I'll invest in a deal in Phoenix, and I've got this diversification. So I want to give people an idea of sort of that market, and before they sort of put 50 or 100 or $1 million in Atlanta. Anything else you would tell someone about Atlanta sort of before we sign off here?
Yeah, first go eat at the Varsity. That's downtown. So
it's called the Varsity.
Yeah, the Varsity. That's a local mainstay. It's been there for decades. So I jokingly say that's the first place I'd take you for a greasy hamburger and greasy fries. But no, I would say for someone it's kind of what flavor do you want, right? If you want a value add Class B deal, I would point you down to the south side, where you see a lot of that e-commerce growth that's been being fueled. If you want some of the Class A, you're a long-term investor looking for that Class A product, I might point you to the suburbs, the northern suburbs. Right now, there's a lot of supply inside the perimeter, right? So I wouldn't expect a lot of rent growth there. Good long-term prospects there, no doubt, but I haven't seen the supply kind of slow down there. But great Class A office, Northside, Alpharetta, Roswell, good value add opportunities in the Marietta area, Norcross area. So I would point you in that direction.
Well, Clay, we put your contact information up here. If people want to reach out to you about a deal that they're working on in Atlanta or outside Atlanta, you've been in the industry for a long time and definitely know your stuff. So I appreciate you sharing your information, and thanks a lot for coming on today.
Thank you, James. Appreciate it.